Hi traders, look closer at this move. Between this high and this low, there's a vacuum, an institutional imbalance that most traders completely miss. It's called the fair value gap. Master it and you start trading with the banks, not against them. And FVG is a story of imbalance. To find it, look at a sequence of 3 candles. If there's a gap between the high of candle 1 and the low of candle 3, that's your footprint. When the major institution drops a massive order, pricing moves so fast that they leave a void that liquidity just can't keep up with. Whether it's a CPI print or a big bank entry, this gap acts as a magnet. Price naturally wants to return and fill that void. But understand this, not all gaps are created equal. The highest probability setups occur right after a major liquidity sweep. We want to see the banks take out early buyers or sellers before leaving this footprint behind. This logic is universal. You'll see it here on the 1-minute chart for a quick scaps, and if we click over to the daily, you'll see 4 major trend shifts. Success here requires surgical precision. Rule 1. We only enter at the nearest edge of the gap, like here. Rule 2. This setup is only valid as long as the fair value gap remains fresh and untested. The moment the price enters the zone or a new FVG forms elsewhere, the original opportunity is gone and no longer applies. We stay out and wait for the next fresh footprint. What happens when the price properly returns to our fresh zone? This is where our professional filters comes in. Watch the exact 50% midpoint of the gap. If the market retraces and the candle body closes beyond this 50% line, the institutional narrative is broken. In that case, we cancel the trade immediately. Risk management is your edge. Set your stop loss just above or below the middle candle of the pattern, or be on the previous swing low or swing high for a more conservative approach. We aim for a baseline reward-to-risk ratio of 2-to-1, but remember, this is just a starting recommendation. Depending on the market momentum and where the next major liquidity pool lies, you don't have to cap your upside. A strong FVG setup can easily be scaled into a 3-to-1, 4-to-1, or even 5-to-1 trade. As the price moves in your favor, trail your stop loss to the next FVG. Lock in the profit, eliminate the emotion. With our parameters locked in, let's let the market do the work. Notice the reaction. Price taps the zone, fills our order, and follows the institutional flow. No lagging signals, just clean execution based on market geometry. See how effortless that looks? When you remove the noise, the market's intent becomes obvious. Trading isn't about complexity, it's about clarity. The fair value gap is the cleanest way to follow the smart money. Master the pattern, master your discipline.